So Meta Platforms has just announced their Q2 earnings result. The market seems like it's ecstatic over Meta's recent performance. It's up around 6 to 7% in the after hours. I'm just going to keep this presentation short, just run through some of the key numbers because I know that all of you are busy people. I think throughout the course of my YouTube channel, people do know me as the Alibaba, Tencent, China bull, but I think people tend to forget that, hey, I'm actually also a huge Meta bull. Just go through my channel itself, just type into the search box Meta. I've made like at least 10 over videos on Meta platforms. And I think last year, I've even written a full-fledged Substack article that is like 5,000 words long, essentially addressing all the different concerns and issues around Meta platforms then. I addressed the 5 curses, the regulatory risks, 10 billion Apple problem, which is the ATT issue, the competition from TikTok, the metaverse, and the upcoming recession and earnings revision. And yeah, if you guys are interested, I think the link to that article then is still in the description below. I also did like a very simple modeling out like what are the growth rates and what are the expectations. And I think from the analysis back then, I did say that there's 4 potential upsides that Meta shareholders could have enjoyed if you enter at the 163 mark then. And of course, we know that from the publishing of that article, Meta actually continued to go on to depreciate. And I think the lowest was around $90, and that's around a 40-50% from the time of that publishing of this article. And I did say that some of the potential upside include deciding to slow down capex due to the conditions of the economy. They managed to somehow regain their footing via R&D and also delay the progress of their competitors, specifically TikTok. Experiencing a multiple re-rating, and the discounting rate of 15% is compressed because of many of these jitters and concerns back in 2022. And it does seem like, I think on all 4 counts, we are seeing some sort of normalization, and the market seems to turn positive on Meta platforms again. I think in this video specifically, I'm just going to investigate what is the market excited about around Meta again. Why are they pushing them up back to the $800 billion glory days in terms of market capitalization? And also, is it a good time to sell or take profits, specifically for those of you who have entered? So currently for me, Meta platforms actually make up around 4 to 5% of my portfolio, and it's the 3rd largest individual name that I hold in my stock portfolio. And of course, for those of you who know, Tencent and Baba, they hold around a 60-70% weight, while Meta holds around 5%. So in the grander scheme of things, it's not really huge, but I think for those of you who have entered in a relatively early period, many of you are also thinking whether it's a good time to exit your Meta position or not. So I'm just going to jump into the earnings report. So long story short, I'm just going to cut to the chase. If you're to look at the advertising revenue by geography, it does signal very strong growth, at least I think it's 11% based on the reporting. And it actually alludes to the fact that there might potentially be a soft landing, even though many people are talking about a heavy recession coming on, and it's one of the most anticipated recession in our times. Many of these names like Alphabet, Meta, they're still posing strong results, which is quite ironic and it's quite interesting as well from an investor's perspective. Next up, I think in terms of revenue by user geography, most of them are also showing great signs of improvements. So I think this is the second most important slide in the entire earnings report itself. It does show that the family of apps continue to harvest a great deal amount of operating income for the entire Facebook group itself. And more importantly, despite the Reality Labs operating loss ballooning to 3.7 billion, they still managed to eke out a 29% operating margin. And for those of the people out there or investors saying that, Mark Zuckerberg is extremely obsessed with the metaverse, he did publicly commit or pledge that he is slowing down investments into the metaverse itself. And for investors that like to engage in imaginary exercises, if let's say we wipe out the Reality Labs and Mark Zuckerberg wake up on the right side of the bed and says that, hey, I think the metaverse project is not going well. Let's wipe out the entire R&D operating expense of the Reality Labs segment. You can see that if you do a quick calculation, a $13 billion operating income on a $32 billion revenue, that's around a 41 to 42% operating margin. And if to compare it back to its glory days, and yes, Facebook is still a software and it's still a tech company with crazy amount of operating margin. But I think in the short term at least, it does seem like Reality Labs remain one of their top priorities, even though it doesn't seem to be playing out. So many Facebook investors or Meta investors on the sidelines have been constantly touting for the fact that Mark Zuckerberg to stop its obsession and to stop allocating so much resources to Reality Labs. But I think it is a reality that we have to grapple with, pun intended, of course. And I think moving on, in terms of expenses as a percentage of revenue, it's trending in the right direction, so it's a good thing for shareholders. Next up, in terms of net income, diluted earnings per share, they have been doing buybacks, so it does look like the profile of their earnings is looking good. Capital expenditure is also trending in the right direction. It's spending lesser and lesser, albeit not forgetting the importance of reinvesting to the AI capabilities. Similarly, even though many people like to say that Facebook, it's a dying platform, nobody's using it, daily active people continues to rise, monthly active people also continues to rise. And specifically for the Big Blue app, yes, it's still growing, So I think people tend to discount the idea of a network effect. Network effect is clearly important for many of these social media companies. And the new launch in terms of Thread versus Twitter, you can see that even though the switch over, they are able to garner around 100 million users in a few days, but that doesn't take away the fact that many people still decide to stick onto the Twitter platform because of the network effect. Yes, Threads might be able to dethrone Twitter, but not at least in the short term because of the economic mode of a network effect. And now, moving on to the most important slide, in my humble opinion, in this entire earnings report, it's really the free cash flow profile of Facebook. We have to understand that when Facebook was trading at the highs of around 300 plus, and then it plummeted down to around $90. What was the story back then? So the story back then was, growth was essentially missing. It was decimated. It was no longer a growth story. Capex was going higher. Expenses were ballooning, and there was essentially an obsession on the metaverse. Mark Zuckerberg essentially lost his way. And because of this metaverse project, it then leads very well into the capex and expenses ballooning. So this was generally the story, and many investors were essentially skeptical of whether they can generate free cash flow or not. And I think over the last 2 or 3 quarters, Facebook managed to prove investors otherwise. But let's not forget that I think just a few quarters back or 3 quarters back, Facebook's free cash flow was essentially zero. I think this is new. We can agree that 173 million, in the grander scheme of things, when they were essentially producing or pumping out 40 billion per year, this looks like a joke. So I think in hindsight, many of this skepticism is actually valid. I'm not trying to denounce the fact that, I knew better than a lot of the other people out there. But it does seem like if you were to zoom out, it is a bump in the road. So this time around, net cash from operating activities, we are going to investigate further on why is there such a huge jump, because this is really a huge increase from compared to the same quarter last year. And because of this huge top line increase, it flows down very nicely. They managed to churn out around $11 billion. So some investors might be wondering, hey Chiking, objectively speaking, is Facebook cheap or expensive today? And I think just to do a very quick valuation exercise, Facebook is essentially trading at around a $800 billion market cap after this recent rally. And if you were to take a trailing 12-month free cash flow, just add up the 4 issues or 4 quarters back, 11, 7, 18, 18 plus 5, 23, 23, yeah, it's around $23 billion in terms of free cash flow. So if to compare 23 billion to 800 billion, that's around a 30 to 35 times free cash flow. I don't have a calculator with me, so this is just a quick approximation. But then you'll be wondering, hey, 30 to 35 times free cash flow, is it too expensive? I think if to compare it to the historical, this is by no means a objective mark, just looking at Facebook's own historical comparison, I think it's trading around 20 to 40 times free cash flow. And yes, the range is huge. So we can't really say that Facebook is cheap or expensive from this perspective. 30 to 35 times, some of you might argue that, hey, this is just nice. But I'd just like to say that if you were to compare it to their peak free cash flow generative ability, they are producing around $40 billion free cash flow. You can say that because of the recent metaverse obsession and the capex, the expenditure moving forward in the following 5-10 years, they're not able to achieve 40 billion. Sure, I do acknowledge that, but comparing 40 billion to the current 23 billion in terms of trailing 12 months, I don't think it's also representative of their free cash flow generation ability. So I think taking an in-between, maybe a 30 billion to $35 billion would be a much safer bet or much representative in terms of their ability. So doing that and dividing it by 800 billion, I think they are trading around a 20 to 25 times free cash flow. That's much closer to the real ability. I mean, if you have to take 40 billion, 800 billion divided by 40, that's closer to 20. But if you take 30 to 35, that's closer to 25 times. So is it too expensive or too cheap? I think in terms of a historical perspective, 20 to 40 times, it's still on the lower end. But then I think one important factor that we have to take note here, I'm just going to put an asterisk. let's not forget the market is always a forward-looking machine. By forward-looking, it's really your ability to look through all these noises, whether it went to zero for some point in time, and whether this huge jump to 11 billion per quarter, do you think is sustainable or not? Because let's not forget, in terms of Meta's ability to generate free cash flow, for it to do more than $10 billion, it's usually in Q4 of the year. Because we know that in the end of the year, there's always Christmas deals and all those clearing, Black Friday, whatever. So it's usually in the last quarter that you get a huge amount of advertising dollars. And also because of the financial year, more companies tend to spend more money. So now, I think projecting forward, it's really your perspective on whether you think Meta is able to continue delivering free cash flow growth. And on top of that, revenue growth, income growth, whatever. So yes, don't forget, it's a forward-looking machine. To me now, if you ask me what am I going to do, I'm still going to hold on to my shares. I do adopt a long-term perspective in the entire growth trajectory and perspective of Meta Platforms as a company. So like I alluded earlier, this is just going to be a short presentation. I do know that some of you might be interested in the income statement, the balance sheet, and Meta actually did increase their debt load. I think in terms of their long-term debt, they doubled their long-term debt position. That might be a call for concern, but this is really just a very quick and dirty analysis for Meta Platforms' recent earnings result. If you guys are interested in a longer, more in-depth one, please feel free to leave in the comment section down below as well. If not, I'll see you in the next video, but more importantly, I'll finally see you on the moon. Goodbye!